Hi, I'm Michelle Darling. I'm the Benefits Coordinator for Burnet Consolidated ISD, and I'm going to give you a brief overview of our benefit selections today, so thank you for being with me. First of all, I would like to extend an invitation to all employees of the district to attend our Benefits Information Night. That will be Tuesday, August 1st at 6 o'clock here in the boardroom at the central office. Spouses are welcome, mentors are welcome. If you're of the younger age and you need a parent or a friend to help advise you with insurance questions, please feel free to ask a friend or a parent to join you. It'll be a very informal presentation. Blue Cross Blue Shield representatives will be here, as well as Baylor Scott and White health plan representatives. So this is an opportune time to get your questions answered about your health insurance, which is very much your most important benefit that you'll be choosing. I'm going on to the overview now. I'd like to say that our TPA, our third-party administrator, is the U.S. Employee Benefits Group out of New Braunfels, and they extend an excellent variety of benefits for our employees. Our TRS health insurance is mandated, of course, by the Teacher Retirement System of Texas. So those rates have come across. It's like everything else in the world right now. The rates went up a little bit, but we have an outstanding and generous board of trustees that recognize the importance of health insurance for our employees. So our district contribution towards eligible employees' health insurance benefit was increased from $364 a month to $395 a month for this coming year. This allows the primary plan for employee only to remain free of charge. So very important information there. Again, your health insurance is the most important thing that you're going to choose. So get the answers that you want. That free plan works for many, many people, but in your circumstances, you need to think about what is best for you and your family. I'm going to move on to other benefits that the district provides free of charge. The next one is the vision insurance. VSP is the carrier for that insurance plan. We just started with VSP last year and have had only positive feedback. All of the providers here in Burnet, as well as Marble Falls and into the Austin area, accept this insurance. There's a $10 copay for your annual eye exam, as well as the choice to have either contacts or a new pair of glasses each year. That, again, is free of charge to the employee. If you would like to add your family, the cost is minimal. It's a very affordable plan. I want to say here that all of our plans are standalone. So if you only enroll in health insurance, but you would like your family to be on dental or vision or vice versa, you can do that. So each plan you have the choice to add only yourself, to add you and your children, you and your husband, or the whole family. The dental plan is also free to the employee. The low plan is offered free. The high plan is, you can choose that as well for a minimal cost of $11.79 per month. Both of these plans provide free preventative work, which is your 2 visits per year with an exam, with the cleaning, with the x-rays. The biggest difference is orthodontia. So if you have someone that in your family that's getting ready for braces, you would want to look at the high plan because it's the only one that's going to help with that coverage. Also, if you have dental problems, issues, and you might be expecting to have a crown or a root canal, the high plan is going to pay a better percentage of that cost. So again, do your research before signing up for this plan. I'm not sure if I mentioned, but that's with MetLife, and it's been very good for us. Telehealth by 1-800-MD is provided not only to you, but for your spouse and for any dependent children under the age of 26. This is just one of our favorite plans here in the district. You can call a doctor 24 hours a day, 7 days a week, You can have a consultation over the phone, over the internet. I've even had one by text message. And if you have an issue that needs a prescription, that can be called in even on a Sunday afternoon. So please, as you're enrolling, make sure that you not only check yourself for this, but anyone in your household that qualifies for this coverage. Your health insurance is probably going to have a telehealth option also, but it may have a charge with it. So you want to make sure that you're using 1-800-MD. Lastly, the life insurance by Lincoln is free to the employees. It's a $30,000 life insurance policy that includes a $30,000 accidental death and dismemberment clause as well. This plan is not only a nice coverage, but it also offers an employee assistance program, an EAP. This allows some legal advice, like for will preparation, and also some mental health help. And that would be for counseling. They actually will set you up with a counselor here in our area. So an outstanding service. I'll move on now to the tax sheltered plans. If you're not quite sure what a tax shelter is, that is a very legal, and I want to just really emphasize that, because some people go, oh, is that really true? But what happens is those premiums or contributions are pulled out of your paycheck before federal taxes are applied. So you are actually reporting less taxable income to the government. So there are 3 plans that we offer that have this tax shelter included. One is the dependent care coverage. This is for families with children in daycare. So that's a way to tax shelter that cost, and then you pay yourself back or you pay the daycare back with tax sheltered money. There's also 2 accounts that I call sister accounts. One is a flexible spending account. The other is a health savings account. The flexible spending account is very interesting. You choose an amount that you want to contribute each month for a set period, which would be the plan year, September through August. And that money is loaded up front. So for example, if you choose $100 per month, September 1st, you'll have $1,200 in that account. That's for you to use during the plan year. The stipulation with the flex account is if you don't spend it, you lose it. So you want to be very careful to plan for this particular account. If you have set prescriptions that you purchase every month, if you have, again, braces for children, if you have surgery coming up or a baby on the way, this could be a very advantageous plan for you. It is strictly, you can't call me in February and say, I want to increase that amount. It is the amount that you choose during enrollment, and you are locked into that amount for the plan year. It comes with a debit card, and there is no charge on this plan. You can be enrolled in any health insurance plan that the district offers, or you can actually be enrolled in none of our plans. You are still eligible to enroll in this account. The health savings account, however, you must be enrolled in a high deductible plan. So there is a Blue Cross Blue Shield plan that's offered. It's called an HD plan. So you would want to look at that if you are interested in the health savings account. The health savings account is very similar to the flex account. It's to be used for medical reasons, dental reasons, vision expenses. It is a month-to-month deposit, so it's not an upfront load into that account. It's truly a bank account. Your money is deducted from your paycheck. We send it to a bank that is actually called HSA Bank, and that's deposited into your account each month. There's a $1.75 charge per month for this account, very minimal. So let me tell you a few really good things about this account. One thing is it is very, very flexible. So if you start with that $100 in September and you watch that money grow and say, you know, I think I like this, you can actually put that in writing to me or by email to me, and I can increase that amount for you. Or on the flip side, it could be Christmas and you need that extra money to purchase gifts. You can stop the HSA for a few months. So it's very, very flexible. It also is a forever plan, and when I say forever, it means until the money runs out. So you are not going to lose it at the end of August. It can continue to build from year to year, and it is a really nice option if you are in that HD plan. Two important plans I want to talk to you about, especially if you are contemplating on having children in the near future, if you are thinking about a knee surgery, if maybe your health is not the best and you might anticipate a hospital stay. The first plan I want to talk about is hospital indemnity. This plan actually pays you a flat amount if you're ever in the hospital. And when I say in the hospital, I'm not talking about in the emergency room for 12 hours. This would be actually being admitted to the hospital with a room number, an admission date, a discharge date. MetLife is the one that runs this plan, and they will require that documentation when you send a claim in. There's two options on this plan. You can do a high option or a low. The high plan pays $2,000 plus $200 per day in the hospital. The low, it's $1,000 and $100 per day in the hospital. And I want to give you just a quick example because this runs calendar year. So we talk a lot about plan year for us, which is September through August, but this benefit runs calendar year. So if you are in the hospital in February and you file your claim, you could get the $2,000, let's say you're on the high plan, you would get the $2,000 lump sum plus $200 per day. You can actually be covered for up to 30 days of hospitalization each year. So you've used 5 days, you've used your lump sum. You have to go back in the hospital in November, a new plan year, but still the same calendar year. So you could still file your claim for the days that you're in the hospital, but you would not get another lump sum. You would not be eligible for that until the next calendar year. So that is something really interesting to think about if there's any chance of a loss of income for things that are coming up in your life, and those are things that you need to make a decision about. The other plan that can help with loss of income is short-term disability. Short-term disability will pay 60% of your salary if you are unable to come to work and complete your job duties. So again, this is works really well for maternity leave. It works well in the summer for knee surgery. I've had a good friend of mine that's, has waited and paid on this for several years, and she finally did that knee surgery during the summer and was able to cash in on this benefit. There is a look-back period on this. So if you are thinking about pregnancy and you say, I'm going to wait till next year, and next year comes and you're pregnant in August and you sign up in September, that's not going to be good because you're not going to be qualified for that benefit. So do think ahead. It's worth the premium to have that in place ahead of time. So the short-term disability works. It will pay you the benefit until you are able to return to your job duties. So that's up to 6 months. So there's another plan that's called a long-term disability plan that piggybacks on this. So if you are truly out for 6 months, you have the long-term disability plan. It picks up at 6 months, and it can pay up to age 65. Again, until the doctor says you can come back and perform your job duties. So those are some plans to think about as you're planning for the future and you know your special circumstances. We have several other plans I'm not going to go into detail about. There's the emergency transportation by MASA, the accident plan, we have a cancer plan, we have identity theft by ID Watchdog. All of those will be on your enrollment portal. and you will see plan documents that you can just click on, and it will give you the information on those plans. And of course, always feel free to call me about those. Lastly, I'd like to talk about life insurance. So again, remember that the district gives you a $30,000 policy, but you also have the option to get more life insurance. There's additional term life insurance through Lincoln. This is very affordable, and it's what I call the what if insurance. So if you're a young couple and you're raising children and you're in a circumstance where you say, what if something happened to me? How would those children afford college? How would my spouse be able to pay the mortgage? Is there debt we would need to pay? The same, those are concerns that, again, the what if. This is an affordable safety net. So, look at that. I'm not trying to push that, but it's just something that is a way to have a savings account without having a savings account. It's a what if. The other plan that we offer is 5-star. It's a permanent plan, so it's up to age 100. So you are truly paying on it until you are deceased. If you compare these prices, the premium prices side by side, you'd probably have a little hiccup because there's a big difference in a price for a term policy versus a permanent policy. The plus on the permanent policy is once you are enrolled, that price is locked in, so it's never going to increase again. The term policy increases every 5 years on your age. Every time you age and go into that next little bracket, that becomes a larger premium. So when I talk about the term policy being a what if, the permanent policy is more of a when. So as we get older, and as you can tell, I'm a little bit older in thinking about retirement. So it is a when. One of these days, we are going to leave this earth, and this is more of an investment to leave to someone that you love. So again, look at these policies, think about those, do your research. If you're getting close to retirement and you're thinking, maybe I need to look at something after I leave the school district, this is a good time to do a little bit research and see what's out there in what I call the real world. And if 5-star is a better option for you financially, you might want to enroll in that in the next few years. Okay, and the very final thing I want to talk about, which is not on your enrollment portal, but is something that you need to think about, is the 403B. The 403B is managed by our TPA, which is Omni, and they are very, very helpful if you ever need them. The 403B is like a 401k. It's a retirement account. It is payroll deducted. You can do either a pre-tax or you can do a Roth, which is post-tax. It's a wonderful thing to have just to supplement your retirement when you get there. The magic age is 59 and a half to be able to withdraw that without penalty. And young people, please don't panic. You still have access to that money. So if something should happen and you need that and you're not near that age, you have the option to take out a loan against your 403B, which you're basically paying yourself back. Or there's also hardship withdrawals that include medical expenses, a new home, and college tuition for children. So this is an anytime enrollment. You do not have to do this by August 11th, but I'll just give you some advice. The sooner you start, the better. So give me a call if I can help. I am not a broker, and I'll say that very clearly, but I can certainly help you get this started. Again, thank you. I appreciate you listening. Give me a call with any questions or call our HR team. They're outstanding. Our director is Michelle Gilmore. Jennifer Russell is our assistant, and then Lucy Parker, our receptionist. And if I'm not available, I guarantee you they'll be able to give you some advice and some help. Thank you again, and hope to see you on August 1st.